Give it a few minutes for everybody to get back in. Yeah, I think I did as well. Fuck it. We ride, baby, we ride. So anyways, back to where I was at. We were on the subject of liquidity and how to spot it in the chart. So again, this guy coming down from stop losses, came back up because he hit all that liquidity, came back down because there wasn't enough liquidity. Revisited it, tried to recap it, did the same. And every time we tap that liquidity, it's slowly going away. Like there just happens to be quite a bit of it, so we might chop here for a little bit and then bounce back up. But what I would want to show you guys is a Bitcoin liquidity chart. What the hell, man? Oh shit, man. Check out that one, man. So what I'm gonna Google up is a Bitcoin heat map. Basically, what this is, a company called CoinGlass draws this up. Come on, man. Why do I use fucking B? This is great. This is all just what I want. I wish I could fucking throw that fucking piece of shit other one, man. That thing sucks. The Bitcoin heat map here, boys. So you can go through basically any exchange that you want. I like to use the Binance exchange because it's the largest exchange. But give it a second to load up. So here we go. So we got our heat map, and yeah, I'll show you how we're gonna ride this. Fucking gay. All right, so we came down. We chopped this liquidity at 117, bounced back up. So it makes me wonder where we're chasing liquidity. So all these bright yellow areas are going to be where liquidity is sitting. You're also saying I wouldn't be surprised if we were close to other liquidity because we already came down and tapped and came right back up. All Bitcoin really is a liquidity hunt. Oh my God, stop it. So if we look at a little bit higher of a time frame, like a week, weeks worth of liquidity. So this is every long and short. Obviously, everything up on top can be shorts that are piling up, and then everything below can be longs piling up. So if big money's hunting liquidity, it's like, okay, cool. It's gonna want to eat the most. So you see right here, we've already kind of tapped into it. There's $116,000 left, or 168.65 million dollars of liquidity just sitting right here. So again, that's either people's buy orders or their stop losses or their liquidation points in the market. So depending on what kind of leverage they're using. But we also have some down here at 115 and yeah, 115,592. And then the next biggest chunk, that's the easiest for Bitcoin to get to is at 121. Hey, Ben, what's going on, man? That's that. Is that fucking Sprite? Looks fucking delicious. Damn. Man, I really wish I had a Sprite. But anyways, that's how you would use a heat map. Again, it's not something I use very often, but if you ever like sitting there scratching your head, because I always like to look at the weekends, because you'll see like, say it's $100 million was too easy, sitting in one area, but then like an equal distance away, there'll be another $100 million. And what that is whales and people with a fuck ton of money trying to hold price steady. So this way they can either say, hey, we're going to drive the market this way once we let a day's worth of liquidity sit at equal portions, equal amounts above and below. So this way Bitcoin becomes choppy. And basically they get enough people in there and they're like, okay, cool. And people are going to start getting bored watching it chop. So they'll see which end liquidity builds up first and they'll pull the liquidity from either above and below. And that's when you see like big old fat spikes in Bitcoin. Right, anyways. So it's kind of the play for Bitcoin. As far as like when I would say it's time to queue up shorts for me. Let's check this out. Get us a nice little trend line going up, and I just rather have it look clean. So one, two, and maybe this one do we have right here? That's only two touches of the trend line. All right, so let's bring it down so I can get three. All right, perfect. We got one, two, and three touches. So this is our current trend. If we're going to break below this line and start closing candles, so if Bitcoin decides it says, fuck it, I'm dumping, and starts closing candles here, and you'll see it try to come back up and bounce back off, come back up and bounce back off. The retest is where you'll want to get your shorts in. So what I mean by that is we close a candle, we break below and close the candle, right? Next candle decides it wants to try to wick back up. This right here is where I'll start putting in the short. And now you can do the same thing too. Like for example, if the next candle goes like that, right? And decides, hey, I'm going to recover, then, let's throw a piece away. Then I will let it bounce, retest, and that's where I'll set a long because the retest was successful. You can typically get in a good idea which way the market will go. Like, because right now, if you're not already in a trade, I would recommend not opening up a new trade until price either rejects or it accepts below, if that makes sense. That's another place I hate when I do that. So it's either going to accept below this trend line or close or rejecting that trend line. Me personally, based on the momentum, I think we drop down to that trend line and reject. But I don't think I don't know, we might hit a new all-time high. Honestly, I would really like to see the 125 region get hit. Like, I think that would just be fucking cool to see. Current longs, leave them open because again, um, based on where we're at in this cycle, we're getting towards the end of our bull run. However, we're still bullish overall. So right now I'm playing off of bullish scenarios. So basically what constitutes a bullish scenario is trend line, meant like just being above. Like our bear scenario is down right here. Let's see. Let me step out of the way real quick. It's going to be below our previous all-time highs. So I would say between 75 and 85K. If we start closing below there, then yes, without a doubt, we are in a bear market and we're probably close to the bottom. Um, I said it when we first get back in April, all the way down to the $74,000 mark. Let's see if I can find it real fast. Right when we get down to here, I remember thinking like the number should have been 69,000. I don't think we got to our very bottom. Um, so I mean, I would anticipate like our bear market bottom to be somewhere between 60 and $70,000, just based on the way that structure works. Because if you actually were to bring this up into a higher time frame, you can get a little bit better. I mean, I'll use 1 day. It's not the highest time frame, but it is a good time frame. Look at that. Look at that. One, two, three. Those are the trend lines still. So looking at things, and again, kind of going back to the way the structure works. We went up, put in a put in our low. So it's one leg up. We are now up again, so we have a higher high. So I would imagine if you were to put in a new low, anything below 106 is very bearish if you start closing candles below that as far as like daily candles. But you can kind of see when you draw it up like this, there's one leg up, one leg down, one leg up, one leg down. We're on our third leg up. And this is our previous cycle. So this was the market of all markets right here. So you see we had one, two, three, four, five, and then we began our descent down. So three legs up. And then we got our bear markets, and then we have our one, two, three legs up, back down. So looking at things from like that perspective, and even go in here, you'll find the same pattern in 2017. Oh, and oh, I'm using Bybit chart. That's why. I usually like using a Coinbase chart, but it was too messy. What year is this? 2020, this fucking year. But 2017 will have the same thing: three legs up, three legs down, bear market. So that is something we're keeping an eye on, and we are on our final leg up. Like no mistake about it. If anybody tells you no, we're hitting 200K, I'm sorry, it's just simply not true. The lines don't lie, baby. And a lot of like the OGs will tell you the same thing. We are definitely towards the end. But as of right now, for the short time frame, so like within about a week, we're still bullish. Um, Getting on to our next chart, we're going to look at Bitcoin dominance, and I will show you the importance of it and why it's always something I use for good confidence. Because if your bread and butter is all still going to be, let's see, is all going to still be alts, that's where you're making the most money, then this chart is very important. And I'll just kind of go up until last summer 2024. So here we are in January. Bitcoin dominance starts to rise. Bitcoin begins to surge. Hits an all-time high right here somewhere, right? And everybody starts getting euphoric. And then we had the rise of the alts. Basically, what happened was the people that were in the market said, "Okay, cool, let's get some risk on assets." So Ethereum-based products and stuff like that. And you saw Ethereum at like a little over 4K, Solana right under 300. We saw coins like Aave at 370, 399. Still kind of far away. Personally, I think that's kind of where we see our alt season tops. And yeah, it's kind of shitty, but that's the way it is. I don't think we see any higher than December prices. Right, and we came down because the FOMC with fucking Gensler on the 19th, dominance rose, but Bitcoin's price dropped. So when dominance rises, but Bitcoin's price drops, alts bleed hard. And this was our beginning of the end, and you'll kind of see we had a little bit of relief right after. So the lower Bitcoin dominance goes, the higher your alt prices go. We even got as low as 54%, which in all honesty, that could have very well been our alt season already. And we will not have one this cycle. Just because it was lackluster did not mean it didn't happen. So these are all scenarios you have to consider, right? So right now we see a pretty good drop in dominance. And for all we know as well, we could simply just have a modified alt season. Instead of having one big rush, we will find ourselves with, that's what I'm looking for. Instead of finding one big rush, we find ourselves with two equal partial seasons. That makes sense. So we're not going to have these 100x alt seasons anymore because simply there's too much in the market and there's not enough money to pump them like they did in 2021. So when we saw, I don't know, I'll use Aave again because I'm very experienced with it. We saw a $680 Aave in 2021, but yet we only seen 399 this season for this cycle. Back then, Solana didn't have the ecosystem it had. Sui wasn't even a nut scratch. All these fucking exchanges didn't have their own native currency, so there was no BNB, there was no base, or if there was base, it would have been very new. Same with BNB. Um, but yeah, ideally though, we want this to drop as much as possible. We want to see this under 60%, like, and we want to accept, and then we will get our big daddy prices back. Going from there, looking at USDT dominance, so stable coins. So now this one right here is basically an inverted Bitcoin chart. So if I were to flip it around, right, it would be the Bitcoin graph. So this one right here, you also want to see plummet. And this is good for the market because in the concept behind stablecoin dominance is, think of it in terms of like the more this goes up, the more money the bank has. If the bank has more money, if the bank has more money, that means it's not in circulation. If it's not in circulation, price gets driven down. So red is bad, so that means it's losing. So that means the longer black candles, they're going to be money flowing out of the bank and into the economy. Well, I got ETH moving over on the next slide, actually, bud. Um, does that make sense? So USDT.D goes down, price goes up for the market. So Bitcoin, alts, the whole shebang. And again, you can still apply structure to these, right? You have your one, two, three legs up, big drop down, but it still puts in a higher low. And then one, two, three legs up, one, two, three down, so on and so forth. So definitely some good charts to actually take a look at. And then let's get over to Ethereum. Oh no, leave. Leave dominance or cut it anymore. All right, and for Ethereum, when I'm looking for strength, I am actually going to use a spot chart because a spot chart is probably the best thing you can actually be using when trying to judge strength because that's true strength of a coin is in the spot market. In the perps market, it's just people using leverage. It's a fugazi, it's fugazi, it's a goofy, it's a what's um, it's synthetic money to leverage on your bets to see, okay, cool, I have $10, but I want to make it 100, so I would use $10 with 10x leverage to give me a position size of $100, right? So I will yield the risk and the reward of $100 worth of a share. So the numbers aren't very accurate when it comes to looking for straight. Now, if you want to see if you're going perps, the perp route, then yeah, you want to use perp charts because that's the market you're in. You're in the synthetic money market essentially. Right now, honestly, I don't truly see a big reason to worry about Ethereum. See, it already had its breakout from this trend line, and we're going to leave that there actually because the retest zone will be there, right? On our current trajectory, three touches, make sure we got three touches. Every time we hit the sign, we're going to bounce. First time we bounce higher. So that is a very bullish sign right there for me, anyways. when I'm looking at a chart. So let's actually take that out. So right now we are still on the up and up until again we start closing below this upward trend line. Start closing below, then we might be in some serious trouble. Um, use an old school chart here in a sec, actually. The old ETH Bitcoin chart. You know, yeah, so that's fucking disgusting. So it's actually kind of frightening, as a matter of fact. So that does tell me we're going to come back down and retest. We got a big old gap there. That's not good. There we go. Ah, so that's what we want. So basically, what this chart's going to be used for is to essentially compare Bitcoin to Ethereum. This is something that when people first started doing crypto, everything was based on its pairing. So for example, based on the Bitcoin pairing, because again, Bitcoin is the king of absolutely everything. So if we do decide to come back down, that's our no. Yeah. Still learning how to read the pairing charts, by the way. It's not something that my generation of trader has to really look at. But I always look at it still for good confluence for structure. Like I think I told Ben um, in chat one time, like, yeah, man, look at this pairing. If this is going to be bullish, it'll bounce here, and it has. So if you look right here, doing dog shit breaks out. It never retested, so that's a little concerning. So we might still have yet to have retested our breakouts right on the pairing chart. So we broke. Now we are on an upward trajectory. Okay. So bam, done that. So let's take a look at Sui. That's what I want to look at. And bear in mind, I am not showing my particular charts that I'm using. I am using team charts because, again, getting a fresh perspective on things is phenomenal. All right, so Sui. Ooh, we could have a double top unless this decides to get going. Let's get on. Oh, that's a daily. Daily's looking bearish. Get it 4 hours. All right, so we are bearish on the daily, but we are still bullish on the 4 hour lower time frame. So this is good. So what I saw was Link on this particular trade that I had just did was a double bottom. Sui is putting in that same double bottom, maybe. So what I would expect from Sui is to come down, pull out a little bit, and then we should see a move higher. Again, that's the bullish scenario. Bearish scenario is coming straight back down. Yeah, I'll take a look at Link and Casper and stuff like that and Sui. Um, so this is what I am expecting from Sui though. And I expect some pain because when I first entered, we were up here and I was trying to anticipate a candle closure somewhere above here. So we would come down and tap and then shoot back up. But I used low enough leverage to where I expected us to come down, actually down to here. So my liquidation is actually right about here. So for me to get liquidated on my Sui trade. So right now I'm for the most part chilling, but obviously seeing a bunch of red is still very stressful for anyone. But that's why I'm expecting it to come down and to do all of that because right here we consolidated on support and we had a little bit of relief, which isn't something I would normally anticipate. Typically, if you get a lot of consolidation here, like over the course of like I would say about 5 days or so, that is a clear sign for a breakdown. Just like the same way if we were to chop around, if we begin to chop around here, just kind of hang out and stay out of the mid-range, right? And so then just chop, chop, chop. That is a sign of orders piling up and then finally being executed, and you'll typically lead to a breakout. Like I said, SUI, I am expecting it to hit the $5 mark again at some point. When that point is, I think it's going to be after the Fed cuts rates. So my current trades, I anticipate to last to right about a month or so before they hit their final take profits. Link, however, that gem, ooh baby, that gem, I don't know what made me think about it, but I did, and I am happy this is my actual chart that I've used for our trade. Look at that, that is a very bullish sign right there, baby. I don't remember to lock this off. I don't need numbers. This long. So you can see we came down, revisited, tapped, came back up, and come back down and revisit. We may even go back as low as entry at the $18.12 mark, or the 18.77. Well, I think it was 18.12. But what I would anticipate is to potentially revisit this uh, s- demand zone. So again, we have that little area right there where people have those longs and everything set up. I expect us to come back down there to grab liquidity, shoot back up. Um, Bear in mind, I am also still very bullish on the cycle. So I don't know if I have a bullish bias or what, but I don't think I do. It's just right now the chart screams will be a bull. It says, John, don't be a pussy. Look, look at that, baby. Been very bullish since June 22nd at 1 p.m. for me. So that is what we are looking at there. So as this takes longer to drop, our floor is elevating, right? So it's keeping us further and further away from these stop losses, and it's essentially keeping our trades safe. Let's see. I want to find a token that people like enough that I haven't seen. You know what? Look at Solana real fast. So everybody that's bullish on Pengu, this is an important chart for them. Yeah, that fucking shit played out like dog shit. I was such a noob. Like this like a month and a half ago. And then India. Wait, do I have my channels? Nope. All right. Ah, I see what's going down now. Let's talk off Solana. So Solana is actually looking fairly bullish. It's also looking very double toppy. Yeah, that's gonna suck. But it's to be expected. I don't like Solana for shit. The only good thing I can say Solana has going on for it at the moment is this. And I had looked at this before. It's got its little deal here, but also got this little deal here, right? So it's formed itself a nice little channel. So if you're looking to trade, I recommend to draw yourself a channel and just kind of see how things are playing out. There we go. Because you want at least one, two, three touches to validate your trend line. Yeah, so I got one. Put this up just a little bit, I think. So yeah, look at that. Look at that. That's your trend line, right? And then you got your leg up, leg up, leg up, leg up. So as long as we hold this channel and we don't start closing channels like below it, Solana will be strong. I don't think it'll see $300 again though. I think we might see between 240, 265 for the cycle, for the last end of the cycle, because the only reason why Solana got as high as it did when it did was because of shitcoin Trump. Um, what was it, like $6 billion in market cap in a few hours? Yeah, look at that. 295. The day before inauguration, took a shit. Big old fat shit from almost $300 down to, see, the 19th through the 7th. So in 3 months' time, it went down to $95. Honestly, I was expecting 85. So I was a little upset about that. But then had a nice little bounce, came back down, put in the low, the high, the higher high, higher low, lower high. That's your signal to short, right? And I always tell people wait for the retest because you see how all these little liquidity wicks came back down. They fell and stopped right about there. So it gave us a nice little bit of a reversal because it touched the same bottom. So it was an equal bottom that could still be bullish as over here, but it was a lower bottom in comparison to here, right? So if Solana's going to push, this is the time. If it does not push, it will break that channel and put in a lower low. That being said, though, we currently have a higher high, so that's going to be a very bullish sign. If you're getting a little anxious with the way that we're chopping, you can actually use these trend lines right here to set longs and shorts and run scalps. Basically, you touch here, that's your trigger to short, right? But you want to keep your stop losses very, very tight because you don't want them to get hit, obviously, but you want to minimize your risk to reward. So with that alone, let's see. So if you look right here, it's there come back down. That is a 2.3 on an R. So what does that translate to in English, John? What does it mean? Hmm. By adding the brush, it fucked with my goddamn shit. Let's see, measurement. But that is an 8.25% unleveraged trade. So if you do 2x, that becomes 16.5% that you could potentially make. If you, or like most people doing 10x, that is an 80% trade for you, right? And then the same thing goes the other way around. So let's say you want to get familiar with longing. Right now, seeing where we're at, I would anticipate pricing to drop and hit about here, right? So that's going to put us there in about 12 hours. Yeah, let's say right about 12, maybe less than that. Maybe the next 4 to 8 hours, you will see pricing come back down here and then shoot back up. Now, the only thing that I need to make sure of is the accuracy of my trend line because this can be one of two things. It can be either a rising wedge or a ascending channel. Ascending channels, albeit very rare, but they're very bullish. I think we are in an ascending channel. Um, what I think is irrelevant because these are not legitimate setups. I don't trade Solana a whole lot, so I'll give you that disclaimer. Um, but yeah, if I was going to enter a trade on Solana, I would work those trend lines because support is support until it isn't, and resistance is resistance until it isn't. Right? There's no manual for this. Let's see, because guarantee you here, we light that line up here. I guarantee you we find an area where this used to be support and resistance elsewhere. Bam, look at that resistance, right? So a few months ago, that was resistance for Solana. And if we go further back, you'll see right here where at one point in time it was support. So when you ask yourself, why aren't my coins breaking out? That is why. Let's take a look here. Now let's take a look at Caspa. Now Caspa, the whole reason why I was trading Caspa out of those three trades was because of fees. Because how long these trades will last, because how long these trades will last, fees will pile up if you're not hitting take profits constantly. I don't expect take profit to be hit, so I need something to feed it. Hence Caspa. Caspa put in the higher high. It'll come back down. It'll revisit here, right, and then bounce right back up again. If you took note, I longed right about here. So 8808, and in my signal, let me see, Casper, what you got here? Let's see, I longed at, oh shit, I longed at 9384 on which day? The 17th. So 2 days ago. So let's see where we're at in the 17th. Extreme scale. I can never find any place to put that. All right, so the 17th, I prematurely longed here, right? Using these candles, using some previous candles. I have longed here and here with liquidity, which gave us about an average of about here. So as you look, we kind of caught a little bit of everything. But when I am setting my stop losses, when I told you I had to update my stop loss for SUI, was because without realizing I had put my stop loss right here, right at the end of the liquidity wick, which will be chased down, right? So my anticipation for Caspa would be this, and I mean, if you want to close the trade now, it's no big deal. That doesn't hurt my feelings. My second golden rule is secure the bag for a reason. Um, but then it's there, and then we see a pretty good little liquidity spike, and we lead ourselves to a new higher high. And what I usually try to do when I'm using like a shorter term trades, I'm aiming for previous highs. So like 12 cents right here, right? And I think that's actually where I had my first take profit. It was right about in here, 12,034. I'm using that. I might even have it lower than that. It might even be around 11 cents, 11 and a half cents. I don't remember. I kind of just start my trades and forget about them unless I'm on my day off. And I'm just feeling like, ooh, yeah, baby, this gets me excited and get the blood pumping. But with Castle, the thing that does concern me though is this. We had our high, we had our low, we had our higher high, we had our lower low. Or you can see it as a lower high right here. For Casper to remain bullish, we need to close above. So the last thing I wanted was a double top scenario. We need to close above here. So 12,483. Because we don't want to put in an equal high. We want profit. That I think I speak for everybody. Even if we only do ever hit back up here, that's still profit. And I want that profit for you guys. Should I want the profit for me? Otherwise, what the fuck am I doing here? Um, so that's what we want to close above that. We want to close above, probably hit that liquidity wick right there. Close, and we probably see a retest to that line. And for it to remain bullish, it must reject off that line. I truly do see a bright future for Casper. The only thing is though, it's slow as dog shit. And I mean, if it's supposed to be Bitcoin Junior, just with shards, it's fucking dog shit. You see something really quick? Oh yeah, you're so bullish. I think I love you. All right, didn't forget that. I'm just kind of going from there. Yeah, I wish I could find like a choppy market. And if we actually break this down to the 4 hour, and bear in mind, you always want to use a few different time frames. You want to break it down and dissect it. You want to find your ranges. So, let's do some CRT stuff. My main man Raj has fucking showed me this and fucking, oh my God, dude. Talk about a game changer. Okay, so our weekly open was here. So, in a choppy market, I would use this candle and I would draw my lines and then see if it's worth my time. All right, so if you look there, there's 20% unleveraged. If I were to long it, long there's tight stop loss, because again, I still want to give the trades room to breathe. So if you look there, just kind of doing a really good risk management assessment, there's a 3R trade. So that is pretty good. And then I would also do the same here. The stop loss just below above that. Again, I am not in the shorting the market phase. It's a little too tight. Yes, there we go. So I'm going to use this wick right here as the liquidity because we have not recapped that liquidity, right? I would trade in this range right here because oftentimes what you'll see is things will just bounce. And if I actually keep going back, see all these little trend lines that I got? What the hell? Oh shit, wait back. And the weekly. So I have it there. If I break it down from the weekly and go to the daily, you see right here that is clearly support, that is clearly resistance. Just on that one candle gave me all that data. And if I continue to break it down even further, so from the 1 day to the 4 hour, you'll see a very clear mid-range too. So within this range, there's going to be different layers of support and resistance. Here's our support while we're above. Below it becomes resistance, so on and so forth. Um, but yeah, it looks like we come out, reject, come back up, reject, come back up. So we're on our second rejection. So you could even potentially look to long this way. And then you'll want to go to previous range highs, right there to 12 cents. So that would be your trade setup if you're looking for like scalps, and that's going to give you 4.3 R and R. And then if it rejects again, that's the same thing, just put the other way around. Follow me, and then I would target down to here to this little supply zone. All that sideways chop stuff right there. It's a lot of buy orders. I would target there for my shorts, just somewhere in there. As a rule of thumb, I usually like to go through and target the centers of it. If you notice the center of this order block or demand zone or whatever, you notice it's right there on support. Before, because if we go below here, if I don't target that, if we go below there, then the structure becomes bearish. Becomes bearish all over again. Perfect, perfect. Any questions so far, guys? Also, if you'd like a certain point analyzed, please, now is the time. I got about 20 minutes of time left. Cool, cool, cool. What about you, Ben Ted? All right, moving on. I'll look at some other stuff with it. Let me go to my watch list. Man, oh man, why did I have to be a drunk little bitch? What if it takes profit too? See, what was that percentage increase? Some entry here, 17% on leverage, topped out right at 22%. Take profit too, right at 26%. Let's just take a look at what kind of R&R that was. Get the stop loss just done because liquidity. Let's see that. Almost a 10 R&R. Including not many trades that I enter. I would say not right now. So right now where the market's sitting is in no man's land. So when you're just hanging around anywhere, so we have our ranges. Go back to Bitcoin real quick. And I'll show you the why. And I get a lot of people ask like, "Oh, should I short to entry?" And I always tell them no. There's a very clear reason why. But for this one right here, it's a little bit more simpler of an explanation. So right now, the time to long and short is at these support and resistances. Right now, we're in no man's land. There's really nothing. We're coming up on support here. You see, we kind of look below and then come back up. Um, for all I know, it may have been enough liquidity to bring us up here and to flip our resistance into support, but it also could just come up, close somewhere around here, and then just continue its momentum down. So it really just depends on the buyers and the sellers, the bulls and the bears. Looking here, let's see if we can spot a divergence maybe. Okay, so there's a low there. It is in fact lower than this one. See that right there. That versus this. Yeah, it's a very bearish divergence right there. So we look here on RSI. Clearly it runs. Something retarded, never mind. Oh, goddamn. What was it over faithful? Nope, no divs. So there goes that idea. So on Bitcoin, there was no bearish or bullish divergences printing on the 4 hour. So let's go a little lower. Do the 2 hour. The song sucks. There we go. So let's take a look here. Is there any divs on these? Uh-huh. Here we go. I'll give you a good lesson in divergence here. Nope. There's a fairly bearish divergence. So if we look here, it's a slight downtrend to touch the top of this candle, right? But if we do the same thing to the RSI, it is a clear uptrend, right? So when you're looking for bullish and bearish divergences, what I am looking for is this little mismatch, right? Because if the peak here is higher, if RSI is higher at that point than this one, and this is clearly higher, if not equal, um, but the RSI shows here being higher with equalized here roughly and a higher high here. That's telling me that is a bearish divergence. Um, in this particular case, it may just simply be a hidden divergence. Hidden divergences don't always play out there. There we go. Hidden divergences don't always play out. So you got 50-50 at best. But looking here, it was bearish. Structure became somewhat bearish, or had a bearish trend within the bullish structure. Um, yeah, so it kind of give you a rough idea there. Let's bring this fucking chart up. And ask one more time. Do you guys have any coins that you've like looked at as far as like, are they worth investing into or trading? And if so, where should you look for setups? Give us a couple of minutes to answer that one. All right, so the time for like the month-long dress swing trade is we've missed the boat. We've already had two legs up and we're on our final leg up. Um, so as far as like having like a big 1,000% on like a 10 to 15x um, trade, it's very slim. I'm not saying it's not there, but it is very, very slim. Um, as far as answering Todd's, let's see, I know you talked about it a bit already, but any more insight on Link? Do you consider the project at all, or do you just, I just look at charts and go from there? Um, do I know what Link is and what it does? Absolutely, I do. Link is essentially an oracle. Um, the reason why you need an oracle in the market is, hold on, give me a sec here. I leave myself little notes all the time. Basically, an oracle is kind of like I always tell people, think of Chainlink as like a security system. You wouldn't want to cheap yourself out in security, would you? So basically, let's say I want to take something from BNB chain and I want to transfer it over to SUI, right? Things that happen in the nodes when bridging their gaps. Um, if you don't have a well-built bridge, your money may not make it. Does that make sense? Your money may not be able to make that trip. Link, what it does, it acts as an advocate. So think of it as like going to a bank and seeing an FDIC insurance. FDIC insurance guarantees your money up to, I think it's like $100,000, right? Um, which is why you see rich people, they don't keep all their money in one bank. It's usually spread across different banks. So like, for example, if the bank gets robbed, guy clears out the entire bank. The money that you got stolen is insured by the federal government. Um, Link, because it's backing its own bridge, they secure your money while it's in transit. Again, if that makes any type of sense. So the project itself in the crypto world is very, very useful. So where I see it with like real world applications will be simply I go to pay a vendor in Bitcoin. The vendor wants some assurances outside of on top of the blockchain. So like I want to make sure I receive my money. If the network is using Link to facilitate that transaction, it's the armored truck. Think of Chainlink as like the armored truck for like the guys who pick up and drop off cash at the bank. And the network itself, like again BNB and Sui, those are the two armed guards. They're the last layer of defense if that truck gets stopped. So it's just an added layer of protection of the asset while it's being transferred. So if I again pay for something in Bitcoin to a vendor, Chainlink facilitates the transaction to from my chain to his chain, and then Chainlink will actually win twice because when that vendor goes to deposit his or exchanges Bitcoin for fiat, um, Chainlink's gonna again help facilitate that transaction from the vendor to the bank itself. And yeah, you just in the world of crypto because there are no refunds, security is everything. The more secure your assets are, the better off that they will be. So Chainlink as a project in itself is phenomenal. Just as of right now, I think we're 10 years away from it being like a really nice setup. Okay, Link knows who loves it, baby. But yeah, as a project itself, it is a fantastic project. It is a very much needed project. It's just kind of again the way that I think of things. Just see something, and then I'll show you right here. And I always get a good chuckle when people think narrative drives price, because like the war between India and Pakistan when we had that little drop, that little drop, I had um I had no idea, but I was already beginning to short the market because of structure. So let's see here. There we go. So the reason why Link is pumping now is it came and retested this area, right? So hit the bottom, so it hit enough support here, and the combination of support looming here. See that little bit of a hit to that wick. If I go just above it, it creates like a nice little buffer zone, and oftentimes coins will come down, revisit, push up. Um, Something that I like to look for as well is what direction does the coin head first. Um, so when I see a coin open and immediately go straight down, I know 9 times out of 10 it's just a retest, and it'll come back up almost immediately. So I would anticipate we see some action like this. Right, so here we are. We're gonna probably hit a little bit of a roadblock about right there. Right about that, right? And what we do is we're gonna create a series of smaller candles. Forgive my artistry, right? And then we're gonna start seeing candles become a little bit bigger, until we get a good breakout. Then we'll see a retest of that breakout, hit here, and then move ourselves up again. And my trade continues. I don't know what I do with this chart, man. But that's what I expect to see happen with Link. I don't think we see drop down here and just a straight shot up. It could happen, yes, but I think this is more logical because FOMC is coming up. FOMC coming up makes things interesting. So this cocksucker is going to see some things. You're going to see a quick drop before and probably a good recovery after. Home sales is a good indication of how the economic conditions are doing. Durable goods orders month over month. So if the economy is good, that means we're ordering more. We're expecting to come in substantially lower, right? So that is a bearish scenario. So if we see a good leg up, this will probably be our retest zone. So for Bitcoin, let's do this. right? We come around, do this little number, come up here because we have good news, and then we're gonna break out. People be like, oh yeah, we're broken out, but then we're gonna have that event on the 25th. We're gonna come back down. People are gonna start panic, right? We're gonna hit this little demand or supply zone, and then we are going to move right back up. Remember that I said this because I guarantee you this will happen. It happens every freaking time. People start getting this is going to be FOMO liquidity, right? But also the market is simply retesting itself on Thursday, um, or rather, for the Thursday, just whenever the fuck this is, right? So we're just going to bridge that gap, pretend that's there, and we're going to see the market actually come down here, right? We might have a red J on Thursday. Friday hits, and we probably close Friday here, and then it becomes the weekend. So then you have that skeptical pump. You don't know how real it is or anything. But either way, it would probably still give us a new all-time high. That's what I'm thinking. That's what I'm thinking. And then we drop, and then all of a sudden the sky is falling. Perfect, perfect. So again, kind of just my thoughts now. Bear in mind, I am no, I'm not a professional analyst. I am a spirited hobbyist that has learned quickly, if that makes sense. So definitely some things to seriously consider looking at. But man, Link is looking pretty strong. Always looks strong. You know, it's funny. I never traded Link like back in December, January, February. I literally just started trading Link in the beginning of April. Before I was trading Link, I was trading a lot of Ondo, just shorting it. And I caught like from like 98 cents and shorted it down to, what did I get to like 76 cents, 75 cents? And holy crap, man, it was fantastic. Not financial advice. I'm gonna steal my buddy Jai-Fi's little moniker. Totally trustworthy financial advisors. But yeah, no, check it out. Do yourself a favor here, Todd. If you think I'm right about how this thing's gonna consolidate, do a quick little experiment. When we come up and we hit this liquidity, which we will, do a really small trade. Do like a 3x. Like don't do anything crazy like fucking 1 million x. But do this little number. Keep yourself really tight stop loss on Link, for example. Right, all we're gonna do is we're just gonna short it down to about here because this is just for scientific purposes. You want to learn how the market behaves. So you're gonna enter at 1950, 19508, stop loss at 1958, and we're gonna have a final pick profit at 1931. Just something super simple. Sweet. And that should conclude class today, guys. I will catch you in the next one. Thanks for tuning in.